Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up slightly, 0.3% on the S&P, as you can see there. And so let's get into it. Let's try to figure out what we can expect going into tomorrow and potentially remainder of this week. Hope you guys watch my extended version of the analysis on the weekend video, and I cover all the more of a broad element of this market. And so if you haven't go and watch that on the weekend video, and let's look at the 65-minute chart here. Looks like, so we talked about this candle yesterday or Friday, right? This candle right here, that is known as a hammer candle. It's a pretty widely known candle, right? A hammer candle looks similar to this right here, and we spent a little bit of time on Friday talking about this candle. The candle is most effective when they are formed after decline like this, because you can see there were hammers here and here, and they just move sideways. So hammer is not a hammer until here's a hammer right here, right? That was hammer, and this was hammer. So when the hammer gets formed on a sideways move, it really doesn't mean anything. When a hammer gets formed after a bullish move, sometimes it means a hangman, which is a reversal candle there. It's mostly effective when hammer candle is formed after a decline. Again, similar to here and here. And the hammer candle is most potent when you see a long lower wick with green body and shaved top. So the less the wick that it has at the top, the better it is. Like this hammer is actually a red body, and there's a little bit of wick there, so it's not as strong as the shaved top, green body, and long lower wick. So it had all of those characteristics which talked about Friday. But any kind of candlestick analysis, when you're looking at candles, it needs a follow through to the upside. If not, that candle can be nullified. And so we did see a follow through today, definitely after that hammer candle. Because what this hammer represents is that, on Friday, last hour of Friday, what it did was we actually came down all the way, and at one point this thing looked bearish, right? Like long red candle, like this. This is what it looked like on Friday during last hour. And then at some point what happened was dip buyers came in, bought it up, and it kept buying, kept going, and then actually closed the hour green. That's what that green candle represents, right? That green body represents. And then not having any kind of wick at the top means it closed the hour strong, right? So it closed an hour with that buying pressure there. And we needed to see a follow through today. We did see that. We did see a gap up and then pretty much grind all day today. But the gap still remains open. So looks like that was a first hour, second hour, third hour, fourth hour, fifth hour. So pretty much a pause day all day long today. And gap remains open as of today. My short-term moving average is residing at 337 on Spider. And that will be where, coinciding with that micro-term pivot there, that's a potentially new support, right? That was a prior resistance, that swing high there. And then we gapped up, and if we do come down tomorrow, that's likely to become a micro-term support there, because there was a prior resistance, and that's a potential new support with the prior resistance and my short-term moving average residing in that vicinity. Keep in mind, my short-term moving average, except this one time, this day right here, back in 11th, But man, this short-term moving average has been money every single time because it was not able to break below the, on an hourly basis, price was not able to close below the short-term moving average except again back in 11. Even when we did that, we out of nowhere we saw the shenanigan gap up. And so that short-term moving average is in that vicinity. So as long as the price is continuing to stay above it, we want to continue to give benefit of the doubt to the buyers. But right now, so when the gap gets open, and then when the price is kind of hanging around right above the gap, it could be vulnerable for the buyers. I mean, gap getting supported like this, not getting filled, is always a good thing for the buyers because then we can potentially see a continuation next day. However, there's a little bit of vulnerability here because if bears were to bring it down, right, this will then turn into an island top reversal. And they must gap it down below 336. It can't be slight gap down or gap down at 337. It has to be gap down below 336, 336.70s, 336.80 or something like that, right? But I mean, that would be just kind of a shenanigan gap down because there are many chances where bears could have done that in the past and they weren't able to perform it. So going back here, we gapped up right here and price stay sideways, right? Bears we could have said the same thing here. Well, bears need to gap it down, turn this into an island top. They failed. There's another gap up right here. Well, we could have said the same thing. Well, bears need to gap it down, turn this into an island top. They didn't do that. They could have said the same thing here when the price was, residing at 335. Well, bears need to gap it down, turn this into an island top, right? Well, they didn't do it either. Well, we're up here at 337. You see, we're at 320. Now we're at 337, 340s now, close to 340. So that will be just that. If we do see a gap down, there will be a shenanigan gap down. But obviously, trend is up, and we're well above my midterm moving average. We can't even see the midterm moving average now. My midterm moving average is residing at 331. I think the last time it got retested was back in here. That was July 30th. July 30th, when Spider was trading at 320. So it's been a while since we got up or got down to retest that midterm moving average. And remember we talked about this. Once my midterm moving average was retested and sustained and price made a higher high, gotten above my short-term moving average, now we're back into rally mode. And we also talked about that rare signal on my oscillator, right? Let's talk about that real quick. So I actually put in different oscillator here. I'm going to talk about that real quick before I close this video, but let's talk about this oscillator we've been looking at every single day. So we've been talking about how this oscillator is giving us a rare signal. It's been just floating around at the top for 2 weeks. I don't know the last time it happened. It's a very rare signal. And with that, market just kept very resilient, very adamant, kept grinding higher. Even with that, despite the fact that we saw pretty decent sized sell-off, on the 11th, on the last hour, we just gapped right back up with this signal. It's giving us a bullish signal. Well, we actually broke below it. Right? You can see that that's a pivot. We bit below it, but then we found support this one. We talked about that, right? Because remember, I think it was like 2 weeks ago or a week ago, we talked about how if we lose this pivot, it's probably going to find support on the next prior support. It is no coincidence that we find support. We crossed up here, which I tweeted out at 2K Kim, my Twitter account, and StockTwits earlier today. So, I mean, it is no coincidence we found support here, and we finally lost it. We broke below it, and then all of a sudden we found support here and here, right? So with that, market, but the thing about that was, though, the oscillator actually continued to rise higher advanced, but price didn't. Price actually moved sideways, so bulls didn't fully utilize it, right? So we're kind of getting into that overbought zone here. So price are starting to, you see the trajectory here a little bit. Price is slowly kind of, we've seen some of these climbing higher move, but the trajectory is starting to be more sideways now. And that's why I actually put up this oscillator here. So this one, you can see price has gone up, but the momentum is, momentum is faltering here. So basically this oscillator is telling us there's a bullish accumulation and there's some distribution here. So that's what it's telling us. There hasn't been a pretty strong accumulation for a couple weeks here. So you can see how we do have some kind of bearish divergence, but this is such a grinding type of bearish divergence that it loses buoyancy. But basically, here's a conclusion with this. So I got two oscillators here. We got this oscillator, we got this one, and then price is obviously staying above my short-term moving average, and we gapped up. Gap is sustained so far. Here is the conclusion. If the market keeps on marching higher, we want to continue to give benefit of the doubt. However, because the momentum is faltering, we are seeing the market is extended and we're starting to move sideways. If we do see some kind of shenanigan gap down or shenanigan sell-off, we could see some further decline to the downside where we may come down and retest, at least retest my midterm moving average. And that's not a big decline. Going 338 to 330, it's not a huge decline. Maybe fill that gap, but we got a gap here at 333 also. That's a pretty decent sized gap. So here, I'll end the video with this. So if, and I'm not saying it's going to happen, but if we do see a gap down, there's a good chance bears are going to try to fill this gap. And they must fill this gap. If they fail to fill this gap at 331, it's going to get right back up. And that's why these gaps are great for the buyers. The more gaps they have, the better it is, because as the bears trying to march it down, all these gaps are going to provide support. And you can see my midterm moving average is actually hiding behind two gaps. So bears have to go through quite a bit just to get to 331. So let's see how the market plays out tomorrow, right? We'll go from there. Enjoy your evening. Good luck trading tomorrow.